Good evening, everyone. A big welcome. My name is Adam from Trade with Precision, and tonight's webinar, the topic is creaking sounds in the market. Is the floor about to give way? So it feels a little bit like it might be a bit out of sync with what's going on in the markets, but there's a lot for us to have a look at. So can I just, first of all, can I do a quick sound check and make sure that you can hear me and see the slide deck? If you can let me know just by typing into the questions box, that would be great. There we go. The sound is not clear. Okay, give me a second. That's a bit odd. You should be able to hear me fine. Okay, I'll tell you what. I'm going to switch it up. I'm going to try this microphone and see if this works. Okay, how's that? Is that a little bit better? Okay, fantastic. So thank you very much, Leon. Good to, thanks for joining us this evening. So there's a couple of risk disclaimers I need to give everybody the chance to digest. And as we go through that, I will just give you some background behind myself. So I am based in the city of London. I will be on holiday next week in Ibiza for 10 days and I'll be back. And yes, I am a technical trader, price action trader, using all the traditional reliable methods, support, resistance, a couple of indicators here and there, moving averages, and Fibonacci levels. So what I would like for you to achieve by the end of the session, ideally, is some clarity with regards to technical trading, the way that we do this. So on the agenda, we're going to talk about finding support levels using Fibonacci tools, identifying entry and exit points, weakening momentum, and of course, conflicting price action signals, as well as a live demonstration on the ISIC markets platform. So what I'm going to do here is I'll go across to the platform, but today I've opted for the MT5 platform, all right, because most people, when I do these webinars, most people say that they use this. So when I say most people, when I've had 40 or 50 people and it's been maybe 48 of them, so it literally is like most people. So what we have done here, so let's just start off with the really big one. Let's go and have a look at what's going on with the euro dollar at the moment. And so just so I can describe what I've used on my screen, I've got traditional, just simple, straightforward moving averages, the 50, the 20, and the 10, nothing too complicated. They don't need to be complicated. The sort of trading is really about doing the big things really well, as opposed to obsessing over details. What I mean by that is whether it's a simple exponential moving average will not necessarily have a noticeable impact on the quantity of trades, winning trades as well. So one of the things I want to talk about here is we've obviously had a very strong downtrend. If we go look at it from a monthly perspective, you can see here that we've seen the euro pretty much decline going back to last year. And it was within a range anyway, but it's actually come all the way down to the bottom of the range, broken through the range, and it's gone down to a level that it actually hasn't been at since 2002. And then if we just quickly move across and have a look at sterling, you'll see that there's a similar move to the downside. And conversely, if we look at dollar yen, you'll see there's a very big move to the upside. So there's a couple of things happening here. First of all, there is obviously a strong US dollar. If we look at some of the other pairs as well, Aussie dollar, US dollar, we can see that same push down. Whether we do that with Kiwi dollar or Aussie dollar, we can see there's the same push to the downside. So over the last year and a bit, it has been largely the US dollar that has been strengthening, and at the same time, you know, we've had a bit of a weak pound as well as a weak euro. And then to add to that, we've been getting a weak Japanese yen. So this is also very interesting because this is now in an area that it hasn't been in, going all the way back to 97. So that's a very, very long period of time. And what's worthwhile mentioning here is that this isn't necessarily a bad thing. Every now and again, we get some big moves that happen in the markets, and we've had price range bound for a very long period of time, going back to about 2014, 2015, and 16, depending on which pair you look at. But most pairs have been ping-ponging around for the last few years, and actually that has not been the best for currency trading. So I think these days, considering the fact that we've got inflation, which has definitely been something that wasn't really a factor until certainly not so much during the first COVID lockdown, but certainly something that has probably one of the factors that has triggered these shifts in currency pairs. And so it gets kind of interesting. I mean, for example, here we've got parity, and it's very unusual for a currency pair, especially euro dollar, to go down towards parity, which means that it's €1 is worth $1. So this is psychological. It's a psychological number, but it's also a valid support resistance level. And if we just zoom in here, you can see that the last few monthly candles have produced these wicks underneath. So if I just zoom in a little bit further, you can see that it's starting to put on the brakes. It's potentially attempting to find some support here. And one of the things that could happen, because we're overdue for a bit of a pullback, we are overextended to the downside. Look, we've had big moves in the past, but eventually we get a bit of a correction. And it's possible. It's possible that we could be up for a bit of a correction here, meaning that we might, over the coming months, have the euro dollar start to work its way back up towards these levels to test them for resistance. And if we do, we could see it go back as high as 1.0850 or 1.089. And that's something that the first clue that is something that could potentially happen is if we finish with a nice bullish candle for September, and October then breaks the high. That's then likely to produce a swing low. So something similar to this, and then start to work its way up to those levels. What's interesting to me as well is, and I think it's worthwhile pointing out, is we use the MACD and the RSI. Let me change the colors here. And these are two very reliable momentum indicators. They measure the speed of the market. So here we can see the price over time. These indicators effectively, the two of them have slightly different mathematics, but they're essentially cousins of each other, and they measure the speed of the market. So what's happening here is that the market was moving down quite aggressively, then moving down aggressively, and then it did another move down. And actually in this period here, it actually hasn't moved as far down. It did another low here and another low, and it's pushing back up. So it's running out of bearish momentum. And this is something that you start to see after a while, but this isn't necessarily a signal to buy. We must always wait for price action to follow through. So if the indicators are starting to look bullish, meaning they're starting to trend higher, then they're starting to trend higher, which means that they're relatively bullish. But what I need to do is to see a shift in momentum to the upside. And so the first thing I need to see happen is to see price break and close above this level. I need to see it shift into an uptrend. So I'll need to see it come back, reject that, and break another high. So once I have that, I have a confirmed trend to the upside, and we're going to encounter quite a bit of resistance as we work our way up. So we've got a couple of different levels that we are likely to encounter some resistance at, and those will be things to look out for. Now, when we get bullish divergence on one time frame, that is usually an indication that the higher time frame is due for a retracement. So in this case, that would mean that we might be seeing price do a retracement here, back up to these levels, or potentially back up to these levels. And if we're overall going to get a change in trend, I think it would be very significant if we break above these highs. Then we might find that we start working up towards these levels. Okay. And that could follow in line with today. There was a rate hike. So there was was it a 75 or 100 basis point rate hike, which could have an effect of strengthening the euro. And so that could potentially create a stronger euro, and so we could see it start to push back a bit on the dollar. And if we're just going to have a look at sterling, we'll also see that you'll note that it's also sitting here at a potential level, and it's also quite overextended to the downside. So again, there is a possibility here. It's not as bullish, the divergence is not as bullish here, but it does appear to be trending a little bit higher, certainly running out of steam a bit. So I would look at this level and see if we can manage to get past that. So let's start to have a look at, usually what should happen is support resistance levels should be visually obvious. It can get a little bit tricky, and this is something that we have to practice over time. It's always something that we will get better at over time. I still sometimes redraw my levels now, and sometimes they're very obvious and sometimes they're not. So Here, for example, we can see that there's multiple touches and rejections here. We can see there's a nice little touch over there. So just by placing it along here, we can see that that's obviously a major level. And what I don't want to do is to start to add so many levels that I start to suffer from analysis paralysis. So really, I feel that that's relatively acceptable. And then I'm going to go through and have a look at these levels down here. So there's a little bit of support here. We break through that. That's fine. That's a little bit of resistance. So far, I'm quite happy. There might be something here. And all I'm going to do is create, what I would like to do is just create 3 or 4 above and below. So I'm just going to create this again. Let me just clear, let me just go through and get rid of these. I just want to get rid of that. And that, I don't want to have too many. I don't want to suffer from analysis paralysis, so I'm just going to do 1 or 2 above and below, and that's where we are. So if I go down to the weekly, I can see if there's anything else that I need to be aware of, any other levels that might be significant, and so far not really seeing anything. All right, so once we break through here, there's not much stopping us really before we come down towards this level at 1.09 or 1.087. And if we can manage to come back up to this level, we'll encounter probably our first bit of resistance. If I go down to the daily, then I can start to see if there's any other levels that I need to be paying attention to, and I would probably add this one in here a little bit as well. If I really want to be fussy, I can move it down here. So I like areas that have been connected with from both above and below here. And possibly just mention this level over here. And that's really it. So I don't want to overcomplicate it. Just want to make sure I've marked any major levels on the monthly and weekly time frames and daily as well. And so now when we start to look at other tools that we have, so we've got pivot levels, we've got Fibonacci levels, and Fibonacci is simply put, Leonardo Fibonacci lived, or he was alive almost 1,000 years ago, a famous mathematician. And one of the things that he noticed was that there tended to be mathematical patterns in nature, but more in terms of proportion. He noticed in the way that leaves grow out from the stem of a flower or a plant, so that they each offset themselves by exactly the same amount, so that they can get light without growing out from underneath a leaf above them. And you notice seashells have these sort of repeatable patterns. Obviously snowflakes do. We get all these different fractal patterns, and we get these repeatable patterns. And so it's arguably in our DNA. You know, if we see someone whose eyes are too far apart, we call it the uncanny valley. It's something that sort of offsets us. If somebody's proportions are off, we tend to spot that it feels very unnatural. So we're used to proportions, and our behavior is also proportional. So at some point, I can't remember who, because I don't think it was really significant, but a couple of traders decided to see if these proportional movements and patterns and shapes existed within the movements in the market. And what they did was they discovered, yes, indeed, there did appear to be some proportionate moves here. So for example, the market can often do a move up and then come back halfway, and then do another move up that's equidistant, and then come back the same distance, which also often happens to be a level of resistance, and then carry on up. So that's a very frequent type of movement the market does. And so there are other types of movements, especially when the market tends to come back certain distances before it goes. If the trend is very strong, it'll do a shallow correction or retracement. If this trend is not as strong, it might do a deeper retracement. And of course, if the trend is really not that strong, it might do a very deep retracement. So what we noticed though was that these pullbacks often come back to these key levels. Sorry, I'm very blocked up. I'm not sure why, so I'm trying not to sneeze. What was I going to say here? So these have been put into the Fibonacci tool. So if we just click anywhere and just stretch it out, we can see that we have from 0 to 100, and we have these dividing points. We've got 23.6, 382, or the 38.2, a 50% move, and a 618. And so usually the way in which we would measure this is if the market has moved and it's starting to come back. So one of the strategies that we tend to use, which is called the trend flow, says that if you see this market that's doing these really nice sort of cyclical behaviors, and we can see that it's coming back towards the 10 and 20 moving averages, it's coming back to the 10 and 20 moving averages, then we might be able to find an entry if price pulls back. If this trend is going to continue and price pulls back to these moving averages, there may well be an entry. Where it gets really interesting is that sometimes that will also overlap, and there's a word I want you to remember called confluence, and confluence is when you find multiple trading concepts that are overlapping. For example, we do have a support resistance level on the euro dollar, and it's also at a round number. So that's two things that we have together. For example, here, we've got support resistance levels, and we might find that this is also potentially a Fibonacci level. So when we have multiple levels that overlap from different tools, from support resistance levels, from round numbers, from Fibonacci levels, from pivot levels as well, we find that increases the likelihood that there will be a density. That's a funny word, but that there will be more orders in that particular area. So usually, this is a funny thing, but if there's a trend going down, there are usually behind price as it goes, there are usually sell orders. This sounds really odd, but when price comes back, it will encounter sell orders when it goes this way. And if it doesn't encounter sell orders, it will eventually start coming up, and it'll shift from bearish momentum to bullish momentum. And when a market is trending higher, below it are all these buy orders behind it. So if price comes back, it can it'll enter a series of buy orders and potentially find support and carry on. So you might be wondering why that is. Well, think about it like this. If we were looking at a stock price, so let's go ahead and bring up let's just bring up a stock. So we might have something like Google or Amazon or Apple. Okay, so we'll go and have a look at this on, say, a weekly perspective. Oh, the data is a bit funny there. So we'll start with the daily one. So here's the thing. There's lots of institutions and a lot of traders that are always wanting to buy a stock. And this is really where it comes from. We've had the stock markets in existence for more than 100 years. And we've only really been trading currencies for since 97. So all of the trading habits and trading techniques have really originated with stocks and then just brought across to other technical instruments. So when a stock price is going up, obviously what the professionals want to do is they want to buy it at a discount. So they might just have a series of orders sitting below so that if the market does come down, they can then just get in at a discount. So that's the logic. It's like saying that I want to buy, like on eBay, I'm bidding on something, but if the price comes down, I've got an offer that I'll have here. I'll be happy to buy it at that offer. And there'll be some people who are hoping that if it comes down here, they can buy that stock even cheaper. And so it sounds really odd, but when the price is going up, you have buy orders behind it. And when price is going down, you have sell orders behind it. So when price comes back, it'll encounter a whole series of sell orders. And so what we often look for is to see if price will find support when it's pulling back on one of these Fibonacci levels or potentially at a support resistance level. The most powerful way to use Fibonacci is in conjunction with support and resistance levels. Something I want you to consider. And so really so that we can identify levels that will likely find strong support. So let's go and have a look at a particular currency pair that's on my list right now. We'll go back to sterling as well, but let's start off with dollar yen. Okay, so dollar yen has had a relatively big move that it did here, and then it did a bit of a pullback. It actually did another move and another pullback, but actually bigger picture, it did a move there and a pullback, and it's continued up. So I'd be really interested to see if it managed to come back to a key level. So I'm just going to put this measurement here. I'm going to bring it all the way up across here. And for the most part, I'm not as concerned about 23.6. So it's not a bad number. It's if the trend is very strong, it'll pull back 23 to that 23.6% level. For now, I'm just going to keep the 382, the 50, and the 618. And what I'd like to recommend that you do is think about this area as a buy zone. So not just specifically the 382 or the 50 or the 618, but when we have a pullback, it could be a shallow pullback to the 382. Coming back 50% is a very normal move, and also back to the 618 to find some support. So when we measure this, we could tell if, especially if price is pulling back, if we can find that it overlaps with anything else, there might be some additional orders here. So we know at the time, so we were measuring from this low up to this high when it started to pull back. We noticed that there was some support resistance level here, which we would have had that in immediately. And we noticed that price came back in towards the 618. Okay, so we have a 618 level that overlaps with a support resistance level. A true support resistance level will have contact from underneath as well as contact from above, which is important because what it's saying is that both the buyers and the sellers respect that level. Excuse me. And so this obviously became quite significant. What then happened, so that's two items of confluence, meaning we had the support resistance level, we had the 618, and then what happened in addition to that was this big green bullish candle. Okay, so now that wasn't necessarily a guaranteed thing that the market was going to head up from here, but it was highly likely. If we ever had any doubts, it certainly became more obvious when we started to see a slightly higher low. So let's go and have a look at it a little bit closer. And I want to apply this to the markets in real time. So we'll go and apply to euro dollar, we'll apply to cable as well. Then we could go down to lower time frames because all of this then translates to the lower time frame. So we've got a low here, we've got a higher low here. We would have seen that potential bullish candle, we would have seen a level of resistance here. And of course, once price from this point turned around and broke that level, then it would have been a pretty clear sign that the market's going to resume back up. In other words, it went from a downtrend back into an uptrend. Okay, so we have this downtrend here coming back down, and then it produced a high low, and then it broke it, and then it's going back into an uptrend. And out of curiosity, would there have been other Fibonacci? Now, the market does not always have to come back to a Fibonacci level. The idea here, excuse me, sorry, I think I'm fighting off a cold. The idea here is that we are looking to see if we are looking to enter a trade. If we are looking to enter a trade, we want to see if price is coming back to test a level of support or resistance that is also a Fibonacci level. I'm just curious that if I measure from this low up to this high, did price come back to it? And it actually did. It came back and found support on the 618. So actually it was a little bit of a pullback on the 618 within the bigger pullback to the 618. This happens. We get fractals within fractals. We don't mean to do it, but it is very much part of the way that we are sort of built. And so we don't really have that swing high just yet. Okay, we don't really have dollar yen hasn't started to turn around yet. What I'd be needing to see is a couple of down days. So I'd need to see at least two red candles where the second candle's broken the low of the first one, and that would then be a swing high. So once that swing high is formed, so let's pretend that we do have those candles. So we've got a bit of a candle here and another candle here. Once we have that formed, then we would go ahead and measure either from any of these lows is actually acceptable. You could do it from the most furthest low if you wanted to, excuse me, and identify that. Now, what's interesting to me is that the 382 overlaps precisely with the old high. So that's interesting. The 50 fib overlaps with these little highs here, and the 618 comes back in here to a support resistance level. So each one of those has got something valid. It just means that now what I can do is observe what price does when it gets here. Here's the 10 and 20. Should price come back into the 10 and 20 and produce a big bullish green candle over here, that could be the possible signal. We would have a 382 fib support resistance level, a bullish candle, and we would have its location within the 10 and 20 period moving averages like these ones here. And that can often be an indication that it's ready to resume. And so that might then be enough reason for us to potentially take a trade. So what are our reasons for taking this trade if we analyze the logic bar? So first of all, we have an uptrend. All right, we have an uptrend. Price is retracing, it's coming back down. And we have the moving averages in the correct order. So these are all the things that make it a valid trade idea. We have the 50, 20, and 10 in the correct order. We have price coming back. If it produces a bullish candle, we have a bullish candle. We've got the 382 fib level. We've got a support resistance level as well, all coming back to the old highs here. And let's see if there's any other fib levels. So if this is something we can sometimes do, is if we measure from other lows as well, we might find that there's overlapping Fibonacci levels. Now, in this case, they aren't really. The 382 and the 382 are not overlapping, in my opinion. They have to be within a couple of points of each other. So they should be almost on top of each other, if not exactly on top of each other. I'm just curious as well, if I move it up to this recent low over here, so I'm going to measure it from this low over here, then you find something interesting. There's now a 618 with a 382 overlapped with the old high here, with the moving averages in that area. So this is what we would refer to as a cluster. When we find that we have two Fibonacci measurements that overlap from different time frames, because this would be from the daily potentially or the weekly low, that might be a weekly low, and that would be maybe a daily low, and we find we have two different Fibonacci measurements that overlap, we would then call that a cluster. So that would be another reason that we should find more orders in that area, which would potentially buy orders, that if they are in there, that we would find some support. Okay. Right, so let's go and have a look at some of the other markets, because the topic is obviously meant to be let me actually, where did I do it? I screen grabbed it as well. Excuse me, I think I am getting a cold. So we want to have a look at finding support levels using Fibonacci measurement tools, identifying entry and exit points. And so usually in this case, what we would do is look to place an entry off one of the Fibonacci levels. And often what happens is traders will place their stop loss behind the most recent swing low. Okay, because if the market pulls back more than obviously back 100%, it shouldn't do that. It shouldn't pull all the way back 100% from that previous low. It can do it, but it's not really a strong trend in that particular case. That's not really ideal. So normally what we would do is put our stop loss behind that. And the logic here, ladies and gentlemen, is that if we have an uptrend, we want to make sure this is an uptrend until this low is broken. And so we would usually put our stop loss behind that. So the stop loss should always be in an area that actually makes sense, so that if the market goes there, it is sending us a message that the market is probably not going to go in our favor. So we want to put our stop loss as close as we can, but in a clear point that if the market goes there, it's going to confirm for us that the market is probably not going to go in our favor. Okay, and so actually the logic is that the market is still uptrend until that low is broken. So the market could even come back here, do a double bottom and do that. It can actually do that. That's kind of what it did here, sort of what it did here. Went up, came back, then went back into an uptrend. So it's the same kind of idea, but we would still put our stop loss behind that. Now it's annoying, of course, because if we had been there, we would have been stopped out at this point. And actually, so usually what we would do is take profits as we go. So I want you to also think about this. We have a stop loss and we have a take profit order, or a limits order. And the stop loss exists. The whole reason it exists in this universe is to protect our existing capital from ourselves and from adverse market moves. So it's like a shield, right? So it can take a couple of hits, but you need to have it there to protect your existing capital. That's what it is. And conversely, a limit order or a take profit order exists to grow our account. That is its purpose in this universe, is to grow our account. So you actually need to use both. Some people like to say, well, I want to use a trailing stop loss because I want to, if it runs, I want to get it. In reality though, we very rarely get really long running trends, and almost always the market comes back and you're up 4% and it closes you out at 1%. So statistically, it has been my experience that the smartest thing to do is to do both, to have a stop loss management process and a take profit process. So also take profits as you go. You don't have to take it all the time, but when you're up 1%, take off a potential, or if you're up 2%, take some money off so that your position is protected, and then ideally trail it or close it out at another major level. Okay, so if we just sort of zoom out on this again, go back to this. And have a look at it on a monthly basis. I just wanted to highlight here that, you know, this is the last time we were sort of in this area. And so we are overextended. We've gone up quite a bit. Where's my object list? Let's just list all. And let's just, can we do this? Just want to see if I can, I just want to clean it up a little bit. Okay. I'm going to just put it there, which is kind of where we've arrived today. We are a little bit overextended. It's unusual to get a very extreme move like this. Happens once in a blue moon. And we can see, actually, interestingly enough, out of curiosity, let's have a look. If we measure from this low to this high, we came back 50% in this case to the 50% pullback on that one. It's quite interesting to me, just at the bigger move. And also we've got a very similar type of distance that we've moved from there to there. This is something that often happens. It's interesting, but yeah, it's a measured move. So here we did that at a 50% pullback and we carried on there. Now, I don't want to get religious about it or fanatical about it, but these tools tend to work, especially when they overlap with other things. And there are a lot of experienced traders that use Fibonacci, pivot points, moving averages, trend lines. You know, there's I would say that, you know, most experienced traders will use that list of things. And the simplest things they will do, in other words, the least they'll work with is just support resistance levels, just price levels, and how does price behave at those levels. But the Fibonacci levels for beginner traders as well just help find additional evidence that there could be some good support there. So let's go across to euro dollar, and let's have a look at what's going on here. And so we've got a major level, we've got parity, obviously, we've got a round number there. Let's go through and just mark these levels of support and resistance. If price does end up coming back up into these levels, I want to measure the distance, so get a sense of how far. So we don't know yet if this is going to turn around here, but if we get a green candle here, we'll start to see, and obviously in October we break the high, that will probably confirm it. Excuse me. So I'm going to measure from the most recent high. I can measure from both of those. Again, if you're uncertain, the difference between these two will be very small. But again, I'm just going to highlight here the 382 is at this level. So interestingly enough, if it did pull back, it's probably a very shallow retracement back up to here. A healthy pullback could obviously bring it, excuse me, as far back as the 382. And let's just adjust it a bit. So if you want to see it from there to there, it doesn't really change it too much, doesn't change it so much. And if you measure it from there as well, you'll find. So I'm really interested in just finding out what those different areas are. And then that gives me some sense of idea that price probably, if it does start to retrace, this is a really good area for it to pull back into. And that was the last time that it really encountered some resistance. Anyway, some support. And so far we know that there's a 382 that overlaps with this. So that's pretty cool. If we go down to the daily as well, we can see where price will probably encounter some sell orders anyway. So again, I'll just measure from here down to these lows. And, you know, we can see already there's been a reaction here against the 382. There's a nice reaction, there's a nice reaction, and so on. So we can see price coming back up into it. And again, we've got these nice overlaps with Fibonacci levels, overlapping with support resistance levels. It's actually fascinating that they do that. But the thing is, I mean, we're bound to produce patterns without even trying. And so that's one of the things that happens. So let's do a little bit of analysis on the markets to get a sense of what is likely to happen at the moment. My nose is blocking out from just the last few hours. So one of the things I really want to highlight here and start to focus on is these lower lows down here. If we just kind of zoom that out, and we've got these high lows up here. We've got it on both indicators, and usually that is a good sign that the bearish momentum is starting to become depleted. But what we need to see, bullish price action start to show up here. So we need a change of trend, and we need more bullish price action showing up, and we are getting bullish price action showing up. First of all, when price broke through this level here, it really struggled. It did break through, but then it got pushed back, and then it pushed through that level again. and immediately has come back up over the line. So in other words, it's testing and it's coming back and testing and it's coming back. And if that level was going to fall through, if price was just going to collapse or whatever, then we would have seen it just more or less go through. But it doesn't mean that in the future it's not going to go down. What it means is that right now, currently there are no more sellers in this area. So what price is going to have to do likely is come back up to these levels. Just looking at your questions. Oh, wow. Wow. Let's sorry, let's just have a look. Just looking if that's the detail. So I just got a message in here that the Queen has died, has passed. Is that confirmed, by the way? Because I know that they were worried about her, but is it confirmed? Okay. Wow. If that's the case, sure. That's oh, my condolences. That's a pity. Wow, what a surprise. Okay. Wow. Thanks for putting that in, by the way. And yeah, wow. Okay. The US has been following it quite closely. Okay, so that's wow, that's just a shock. But I mean, she had a good innings, didn't she? Okay, so I don't mean to be rude. I'm taking it seriously, but I'm going to sort of carry on with this. But actually, so far, it seems to be coping okay. If we look at it in the last hour, it hasn't missed. Maybe it hasn't. The news hasn't sunk in yet, and maybe there's much of a reaction. We're seeing price sort of push up a bit, and if we go back to euro, you see that pushing up a bit at the moment. So what we kind of have is more the dollar that is kind of taking a bit of a hit. Where is it here? Dollar Swissy is starting to push down quite a bit. So we have more at the moment. It seems that it's more the US dollar that's just quite tired, that's taking a bit of a break. And so it does appear as though we're starting to see, but this is, look, for now, guys and girls, we are still in this area, which is still a, let's call it a range. We're still in this range, and we're not really safe until we get out of that range. So you can see it's very messy and choppy here, and it's ping-ponging around. And what should happen, what normally happens is once it does break out, if it breaks out to the upside, it should start to behave a little bit more orderly. So right now there's not enough buyers or sellers, but once it breaks above that area, then buyers will come in. They're waiting for it to break up before they start buying. And then we'll see if it starts to head up a little bit higher. So that's one of the things that we're looking for. And if that's the case, we're probably going to see the pound potentially also start to climb a little bit higher. I want to just confirm, by the way, that we have the same thing here. We've got this very bullish price action, so a move down and a more bullish candle coming in. So we've got a bullish candle here and a bullish candle here. It's not so much that we have a bullish candle at the end. That doesn't mean anything. But here we've got one, and here we've got one. And we have bullish divergence over here. So all of those things together mean that the bearishness is subsiding, is going away. But that doesn't mean that we have a confirmed change in trend. It means that we could be getting one. We could consolidate for a while and then carry on down. So in other words, it could come back up here, find there's no more buyers, and then eventually more sellers do come in and they start and we carry on down. But for now, what I'm looking to see is a break, especially a break above there would be a likely indication that we're come back up towards these old highs. And again, if I'm seeing this happen on the euro dollar at the same time, and maybe seeing Aussie dollar or Kiwi dollar climb, if I see that on the same chart at the same time, when you can see they're all starting to push back up a little bit, not just the one candle, but we can see the behavior here is generally more bullish. Let's look at Kiwi dollar, is also starting to look very similar here. We've got euro dollar, excuse me, is starting to look very similar here. So when they all do it together, then that will be a clue that the dollar itself is the thing that's subsiding. So the dollar is just the biggest, it's the biggest currency in the market, and if it's moving, which it has been, it's the biggest kid in the playground. It just pushes everybody out the way. So that's why I'm watching all those charts at the same time, because if, as I said, if they all start to move and they break through these levels, we'll see it start to pick up pace. And if it's happening on all of them, then we know it's the dollar. So that's as opposed to the euro, the pound that's potentially doing it. Excuse me as well. So let's also do one more thing. Let's go and have a look at, so that's a very important thing. How many of you are familiar with what I'm talking about here? This bullish, this divergence. Who would like me to explain that a bit more? I'm happy to do that, by the way. Excuse me. And while we were doing that, let's go through. I want to go and have a look. I used to have a script. Down here that would clear the objects, delete all the objects. And I know, Leon, you were asking me to talk about PSC Trader. So I've asked the client to see if I can do it. Otherwise, as I said, I'll do one on YouTube for you. Just for those of you who don't know, PSC Trader is just a script. It's a free script that allows you to place trades. So you just put it on the chart, and then you can, when you put it on, you can then place orders. It's like a nice little auto calculate. So if I go, okay, I want my risk to be, I want it to be 1% per trade, I can see the lines on the chart. So there's a green line there. If I want to, for example, if I wanted to buy or sell, I could just move my entry to a certain point. Let's do pending. And where's my stop loss? Where is my stop loss? I'm going to go short. There we go. So I can just find it. Okay, so here I'm going to go long. Where is it? 9756. Oh, that's weird. There's no, I'm looking for my stop loss. Weird. Okay. Anyway, so this script is a useful tool for beginner traders so that you can just have your risk pre-calculated over here. And then you run the script and it just places the order for you. So that's not really what I'm supposed to be talking about now. So I'll sort of go back away from that. Okay, so let's go and have a look at some of these. So what I want to do here for all of you is let's go remove all the objects. I want to just have a look at the I just want to have a look at the euro pairs. So what I'm going to do is just drag the euro pairs onto the chart and zoom out a little bit. What I want to do is get a sense of the last kind of 10-20 candles. Are they heading up or are they heading down? And here we can see we've got a bit of an uptrend here. So let's look at Euro Aussie. And Euro Aussie started to push up a bit here. So again, the last sort of 10-20 candles broken by these highs. This is also looking really nice and bullish. You'll see there's a bounce here and a bounce here. And you might not, again, don't worry, because over time your brain will start to put all this stuff together. But if we look at it on a weekly, that's a double bottom. So it's bounced again. And also you will notice in this case, although we have a slightly lower low, so that one is slightly lower, we actually have a higher, this is higher and that's higher. So that's a little bit bullish. That just means that there's a good chance it's going to come back up to those levels. Okay, double bottoms, double tops, they're amazingly powerful because they'll never change because they always mean the market has rejected those levels. So we have that's that low, that's that low, and we can see prices come up, it's broken these highs as well, and we've got a high, low, high, high. So we've ticked a lot of criteria of this. So that's looking a little bit bullish. Let's look at Euro Kiwi. Euro Kiwi has got an uptrend at the moment on the daily, so that's looking bullish. Euro Yen is clearly bullish, but it's back up at a major level, so that's fine. But that's also driven by the yen as well. Let's look at Euro Swissy. Okay, so Euro Swissy has also, here you can see it again. You've got lower lows here, but you can see here we started to trend a little bit higher. So this is also very bullish. That means that we've got a bit of a retracement happening. Possibly that the market might want to come back up into these levels here. But I need to see it break through here again. I want to see it break above that, and then I'll start looking for trades up to this level. So what we do as traders is we often are looking for when price moves from one level to the next. That's where we're hoping to capture some of the profit, some of the profits or some of the, those moves. And if it trends well, it's great. Sometimes it doesn't trend that well. Here it's, it's been okay, but kind of here it went too quick and this was very choppy. But sometimes it does start to trend nice and smoothly. So as soon as you see it sort of starting to look good and pull back, there could be a nice little setup here. Again, we can measure it with Fibonacci to see if it's coming back to a key level, but also I like it if it comes back to a price level. And then we like to see it sort of carry on from there. Okay, so Euro Swissy is looking bullish, not necessarily as strong. It was actually nice and strong here, and it's actually come back down. Euro CAD is definitely looking bullish. we haven't got that confirmed uptrend here, but I would say once we break through that, there's our next target, if not up here. And we've definitely got bullish divergence. Okay, so what does that mean? The bullish divergence, okay, cool. So these indicators really measure speed over time. And if the market is moving quickly and then starts to slow down, so in other words, it's wobbling around, it's not moving down as fast anymore. These indicators will be trending with the market, and then they'll start to get left behind, they'll start going up when this starts slowing down. And they're a very reliable indicator of the market losing its momentum, its trend momentum. It doesn't, by the way, mean that it's going to guarantee change direction. It could go into a consolidation and carry on, but it does mean that the selling pressure or the buying pressure has subsided, or the risk is higher. Do I trade patterns? Absolutely. I mean, on top of everything else I do, if I see it's a double top, you know what I was talking about now with the Fibonacci, if we have a Fibonacci level that overlaps with a pivot level or overlaps with a support resistance level, that's a bonus. In addition to that, if it's also a pattern, so for example, if this is going to be an inverse head and shoulders pattern, that's another reason. You could call that a confluence again, or a double bottom could be confluence. It's another reason to consider taking the trade. So the trick is to skill up when you're a beginner, to skill up to get all that knowledge, and then you're still going to have losing trades. So what you're really doing is finding lots of reasons why a trade should be successful, and you'll take 10 trades and 3 will be losses potentially, and 7 will be winners, but you built up the case to take them. So this is definitely looking bullish. So I'm only bringing it up because so far quite a few of these euro charts, and the euro has been very weak. If you look at it from a weekly perspective, almost all the euro charts have been tanking for the last 6-8 months to a year. And I think they're all starting to get a bit overextended on the monthly basis anyway. And they're coming back down to major levels, and potentially they're going to need to do a bit of a correction. They're going to need to come back up a bit. And I think that's part of the reason we may well be seeing that on many, if not all, the euro pairs. So let's compare. Let's go look at pound Aussie. So here I'm going to go see if there's similar bullishness in the pound. Not really. We had a bit of a level here. We've broken through that. It is trying to do a bit of a correction, but I think it's not the pound so much that's strong. I think it's more about the dollar potentially being weak. Okay, so here we've got a level of support. It's trying to turn around, but hasn't done it yet. It has to break above these highs to get that shift. Pound yen is quite bullish, but you can see it's not been as bullish as euro yen. So the pound is definitely weaker than the euro. Pound Swissy, here we go. Sorry, let's get that refreshed. Look at that, a very kind of downtrending, also definite bullish divergence creeping in here. Not so much on this one. I would prefer to see it on both. So I use 2. You can use any ones you want. You can use stochastics, CCI, MACD, RSI, Williams %R. There's so many different ones. I use MACD and RSI really just because they are the most widely accepted by most of the professional traders that I know and that I followed over the years. So definite bullish divergence there, but not so much over here, not so much over there. I would prefer to see it on both. So when you see it and it's strong on both, then that's a strong likelihood. If that was the case here, then I would be waiting for a strong bullish reaction. You know, I'd like to see the market start to push back up, start to produce bullish candles, and then start to break above these highs. It's not doing that yet. So it's to my mind, the pound is weaker, and that's a strong trend. Pound CAD also pushing lower. RSI is trending lower over here, so price is trending lower, like from those lows to those lows, and we're still pretty much trending lower here. So that momentum is still bearish. It means that, in theory, this trend is still healthy. We can still trade it. So all the pound pairs are hitting lower. They don't have as much bullish divergence, but the euro does. So if that's the case, if the euro is going to strengthen over the pound, we would expect to see euro GBP climbing. So if we bring in euro GBP, it should be going up, which it is. And so it looks as though, I mean, look, of course that might not be the case, might not, but so far it would imply that we're going to see the euro strengthen over maybe a few weeks, maybe not a few months, but surely more than just a week. I would expect it to start to work its way back up. And then let's have a look at some of these yen pairs as well. Actually, the one I want to do, sorry, bear with me, is to have a look at the indices. So if we I should highlight that we are still technically in an uptrend here. We really don't have a clear lower high, lower low. We're still in an uptrend. We've just had a very strong correction. And let's see if we measure it, if it arrived on any Fibonacci levels. So we'll measure from that low up to that high, and it's done at 382. That's cool. I'm going to measure from here as well, just in case there could be any other potential overlaps. So we'll just measure from there up to there, and you'll see, okay, we've got a bit of a 618 as well over here. So it appears to have found some support, whether it's from weekly traders or from monthly traders. This bearish candle here, guys, is obviously not a sign of strength. It means there's just not enough buyers up here. But it doesn't necessarily, I'm not saying it definitely doesn't, but it doesn't necessarily mean that the market is going to tank. So the major levels are sort of here. There's a level, there's another level down about here, and then we would be down here. Okay, so what it could mean, simply put, is that we come back down towards these lows here. We just come back down to these lows, we double bottom, and we start to hit up. So if price comes down here, we produce another bullish candle like that, or any bullish candles between here and here. So if we produce a bullish candle for September or October, and Septembers are generally not bullish, but if we do, I would say that it's take that as a sign of optimism, because this was very bearish. And if the market doesn't follow through and pushes back up, then it's clearly not as weak as everybody thinks it is. So I'm just highlighting that. And again, it doesn't mean that, and if it is going to fall through, these are my first levels. I'll watch and see how it reacts at this level, then I'll watch and see how it reacts at this level, and then if we fall through that, we'll deal with that when we get there. But it's good news in a way that the markets have already let off quite a bit of steam. So let's have a look at a couple of big stocks as well. So far, if we look at that, for example, that looks pretty good. If I go and grab the S&P, let's look, okay, let's go through it daily. Actually, the weekly is what we need to see here. Tell you why. Because this could be an inverted head and shoulders for me, if that makes sense. If we break above that, we're really good. So no one's really expecting it. But if we produce a higher low here and the market goes back up from here, that's, again, is a very, very good sign. It's not a bad sign. So yeah, and it's that could be something that happens. So far, look, it's Thursday, we'll see. But a bullish candle here and a break next week could be the start of a move. Now, I'm keeping both possibilities in mind, that the markets, that, you know, we're going to have a recession and the markets are going to struggle a bit, or, you know, we can have a recession and still have the market be okay. It doesn't make sense, but it can sometimes happen. You know, inflation and a recession is a really fast way to kind of cool down inflation, if that's going to be the case. So I'm just keeping both in mind. But it's interesting to me that we've produced a bullish candle here instead of just dropping right down here again, sort of like this. That was, if you look at how fast these ones fell, and how fast these ones fell, we fell down here, and this week we're sort of holding. So I want to know if anything's going to happen that's going to change that, and these are the levels I would then watch. But right now, that is not looking shockingly bad. If you think about how pessimistic everyone is, it is in a downtrend. It is in a downtrend. For me, it's one of those situations where I would not trade it yet. It would have to produce a very bearish setup here for me to trade it back down to these levels. You can see there's some reaction with price, and also that's a level of support and resistance. So that could act as future support, and we are on a downtrend. So given that the weekly candle is looking a bit bullish, and that we're still on a monthly sort of uptrend, I'm reluctant to short the market at this time, even though it is on a downtrend. I'm not convinced I would trade it to the upside as a trader. I will become more bullish on it, obviously, once we break above there. And certainly I would say if we broke above that, or if we did this would be a really good setup for me. A higher low and a break above there would be possibly a very good sign. We'll see. And then we'd have to see how price reacts at that level. One of the things that could happen, this is a legitimate thing, it could come back up to here and then do that. It can. If it can't get through there, then it will do that. So the market doesn't always know how it's going to react. It normally waits till it gets to a level, then it sees the reaction, and then you've got a couple of traders like, okay, that's not going to make it, I'm going to switch to selling or something, or people see sell signals and they jump on. And so it's always this ever evolving kind of series of audits. Let's look at the FTSE quickly, get a sense of perspective here. So we are near the all-time highs. We had a bullish candle here, we are testing support. So this is really what I want to be keeping my eyes on. I don't trade the FTSE months, it's very messy. The DAX is more interesting to me. And again, this is, we're testing a level here of support and resistance. So I would say if we fell through that, we're coming back down to these levels here. We've let off a lot of steam, so that's pretty cool. I think it's always a good thing every now and again. You should like have a bull move and then a correction and a bull move and a correction, because otherwise you never get to buy at a good price. It's always going to be too expensive. And so again, if we look at gold is another one that's interesting to me. It's showing bullish. It's at this major level. So let's have a look at it. It's at this level down here. If we go to a daily, this is a bit of a double bottom. So again, I'll show you the weekly potential. If we get a bullish candle here, we could see something happening there, a bit of a bounce there and a bounce there. So nice bullish candle there. We had a move up from that. And then we had another bullish candle here and another bullish candle here. It followed through, but it should be pushing faster. It should be pushing further. That's a bullish sign and that's a bullish sign. So we're seeing more bullish candles coming in, meaning more buyers are stepping in and pushing back. And we've got a little bit of a sort of, this is starting to look a little bit more bullish, but it's not following through. It's still struggling with this level. So I want to see where we close tomorrow. Do we close down here or do we close back up above that level? That's quite important. I would say if we close back up above it, we're going to see next week some good moves to the upside. How does silver look? Oh, oil. Let's have a look at oil. Oil, by comparison, has been quite bearish. So that broke through a level of support, which is over here. If we go to monthly, we're back down at these old highs here, and we're still within the buy zone. So if you think about it, this is as coming back into the moving averages, it could ultimately produce a bit of bullish candle, but this is the monthly candle so far. Okay, so a little bit of, it's starting to creep a little bit higher. I'm finding the RSI a bit useless at the moment. I would say if we push back up and we start to break up above those, we're going to start to recover from that. But right now, that looks like a very strong level of support that we broke through. So I would look for price to come back to this level and produce a bearish candle if it could, and then that could be a good shorting opportunity. And that could be a good shorting opportunity to the downside. All right, so that actually is a pretty good look at the market. One of the other things that I like to do is look at the bigger companies. So if I look at something like, I was going to say Microsoft, which is very stable. If you kind of look at it on a monthly basis, it's always been very, very stable. And so if the stronger companies start to recover, then I would say we've got something going. So in other words, the companies that are generally the healthier ones, like Berkshire Hathaway or whatever, if they're doing well, then I would say generally we should be okay. I'm not sure what's going on here with Apple. That data is not quite up to date. It's giving me some mixed stuff there, so sorry about that. I might have to download it again. We've got Coca-Cola. How does that look? Not bad, a bit of a consolidation at the moment. It's still above that 50-period moving average, still above these old highs here. From a monthly perspective, it's coming back into this area. So it's got strong resistance there because that reaction there, and then it tried again and it got a reaction there, and then it came back down again. So there was a bullish candle here. There's just not enough buyers above that, but there's still plenty of buyers down here, just not enough up here to carry it, to keep it going. Excuse me. And so some of these, if they start to recover, especially Coca-Cola, I would say, Berkshire Hathaway, Coca-Cola, Microsoft, ones that have always been looking pretty stable, then that is a good sign. I think that the market is going to be okay. All right, so I can't believe the time I'm looking at. I just realized it is exactly 8 o'clock, so I don't want to keep you too long. What I was going to say, sorry, I apologize for my coughing and sneezing and everything. I'm sorry about that. It wasn't what I like to do. I was going to say, obviously, if you have any issues or questions about your account or the platform, please get in touch with the lovely folks at IC Markets, support@icmarkets.com. And yeah, I hope that you found this sort of instructive and useful. Francis, I really appreciate that. I really do. Thank you. I can never hear it enough, man. It's not my ego. It's just nice to get the feedback, and I'm trying to make sure that I can brain dump what I've learned. I've learned from some good traders. I've had bad education in the past, but I luckily came across some really good traders, and I've picked up from them, and I want to make sure that I pay it forward. So make sure I can try to clarify things and have it make sense. So what we tend to do, by the way, is wait to see what the market does at key levels, and then make a trade based off that, rather than assuming what the market is going to do. That's what most people do. So we can't really predict what the market's going to do in the long run, but surely short term we can get a sense of what it's, if it can make it to a level, if it's looking bullish or bearish, and then we trade the immediate move. So ladies and gents, thank you very much. I'm going to end the webinar and let you all go. And I'm going to go read the news, go find out more about the Queen. So thank you again. Leon, thanks. I know I was supposed to come back to you about a call. I will reply to your email, okay? Ladies and gents, thank you very much. Have a good evening. Thank you.